All right, so let's begin and let's talk about the market trajectory. I have with me Pradeep Bhattacharya, President and CIO Equities, Edelweiss AMC. Pradeep, good evening and welcome to the Money Show. All right, so what's the sense of the market that you are getting? The market has, tested 23,000 mark as well. The FII outflow that we are looking at, the depreciation in rupee that we are looking at, and also a lot of concerns, especially when we talk about global triggers. What's on your radar and how are you looking at this market movement?
Through yourself, wish everyone a very happy new year and thanks for inviting me to your show. I would say that it's not out of the ordinary when there is a meaningful amount of uncertainty lined up in front of us over the first few months of the year, and the market movement kind of reflects the same. I'll point you to three. First of all, I think the earnings have hit a pause for the last couple of quarters, the June quarter and the September quarter. And the current result season that is ensuing will probably also lead to some sort of earnings downgrade. So far, we have seen an earnings downgrade of about 6 to 8%, maybe a couple of percent more in this quarter as well. So that's keeping the market a little bit nervous. And secondly, two investments or two events in front of us. One is Trump taking over in the United States. And second, the focus of the budget this year are keeping the investors kind of waiting to see where the focus of the local government is going to be when we are talking about a union budget this time, and where the global policies are going to look, what the global policies are going to look like when Trump takes over. So with so much of uncertainty in and around, some of which are unknowable, I'm not surprised that the market started off this year with a tinge of volatility.
All right, Pradeep, let's also look into these sectors now where you are bullish and also sectors where you have gone underweight. So what is on your radar and what's the fund house call?
Sure. So as you know, as we have been talking before, that we favor sectors where we think earnings are likely to be relatively resilient than the broader market. And in our opinion, those sectors include IT, real estate, certain segments of manufacturing like EMS, and finally, we think from an underweight stance for better part of last year, consumption could be the dark horse of calendar year 25. Those would be the 3 or 4 sectors that I would call out where we would see earnings relatively resilient over the year or so.
All right, I really want to understand the triggers that we are talking about on the sectors that you are bullish on. Manufacturing, you mentioned, IT mentioned, real estate. You were talking about quality NBFCs, and dark horse will be consumption. So what's the trigger? What are the factors that are actually holding these sectors up on your list?
Right. So I think if you look at real estate, for instance, two factors that I would point out. One is that if you look at the housing unsold inventory, that's at the moment close to 7-year low, which is a good starting point. That is low inventory in the system. And secondly, as we go through the year, as we see some rate cuts start to happen towards the back half of the year, hopefully that means slightly better times for real estate earnings and the companies linked to that, both direct as well as indirect. So that's on real estate. On IT, I think as a fallout of policies of Trump making U.S. corporate spending better and tax rates lower, that the indirect impact of the same would be in Indian IT services companies. That I think will play out probably the back half of fiscal year 26. And that's one of the reasons why I think IT could do better. Not to say the near-term currency depreciation of rupee versus dollar is going to keep the sector in the flavor. And finally, when we talk about NBFCs, again, relatively, rate cuts would stand to benefit NBFCs. And if you look at valuations, there's one segment of the market where valuations are still intact. Finally, consumption. We don't have great hopes from consumption in the first half of the year. But as we get towards the second half of the year, I think the tables could turn and the sector could have better days ahead. That's the reason we call it the dark horse of calendar year 25.
Pradeep, the first half of the second year is estimated to be slightly volatile. What is the reason behind it? Are we talking about global factors which are playing out, and then in the second half of the year we'll see a lot of things maybe settle down? Also, we might see a different rate cut scenario, or obviously it depends on the data that's coming up, but then situations might just change in the second of the year, but then first half of the year, which is very crucial, is likely to be volatile. So what's the reason behind that?
The two reasons. One is that we are going to, in the first half of this calendar year, or the fourth quarter of the fiscal year 25, the current fiscal year, we are likely to see the fallout of lack of decision making from the government and various different parts of the economy, as we just come off an election year in India, and also an election year for 50% of the top 20 nations across the globe. Remember that in most of the countries, when there is an election, usually big decisions don't get made. And that's why by the time we end FY25, we'll probably look back and say there's probably a lost year of earnings. But as we get to the end, around about March, April, most of the global policies have been set. We would know what Trump's policies are. We by then would know what the Indian government's policies are, and likewise globally. So with most of the policies being set, the focus will be back on earnings. And that's where the earnings growth story of India, which starts to kick in as we see an ensuing rural recovery, as we see some sort of capex coming back into the spending patterns. And finally, as we see some of the private sector capital expenditure also looking to pick up. All of that will probably start coming back in FY26, which is good 3-6 months away. So basically, the thinking is that as we get to FY26, earnings will be back in focus, driven by the triggers that I talked about, and that hopefully means better days for investors.
Pradeep, what's your take on the FII's outflow and selling?
Right. So I think, 2 or 3 things that I would point out. First, the selling, if you look at the total amount, people quote at somewhere between $10 to $13 billion. But if you put that in the context of how much FIIs own in India, that will probably be somewhere between 1 to 2%, which means what they have sold is really profit booking rather than trying to get rid of their India holdings. That's one. Second, I think the FII outflow is somewhere linked to the strength of the dollar, because obviously they invest in dollars, and if dollar appreciates, then obviously some part of their returns get eaten away. And hence, the return on FIIs or return of FIIs would be linked to once dollar stabilizes, which I think the first instance of that happening could be once we know Trump's policies and what he plans to do with regards to spending in the United States. That's the second point that I would make. Third, I think the relevance of FIIs has come down in India over a period of time with domestic SIP flows, the pension fund flows, and the passive flows means that the domestic component of flows are a meaningful proportion higher than what we have seen in FIIs. So all these make me feel that sooner or later FIIs will come back, but for the moment, it will be the domestics who will hold the fort.
Also, Pradeep, so now keeping all these things under consideration, what should be your portfolio construction like? And if at all you want to reshuffle your portfolio across market caps, are we still seeing little steam in mid caps? Can we still go heavy over there, or you believe that mid cap and small cap, you should just transfer all the profit to large cap, because this is the year when you need stability in your portfolio?
Incrementally, great question. I would say that the starting point of this year has been that valuations of large cap are at par with 10-year average. So valuations are in favor of large caps. On the other hand, if you look at mid and small caps, the valuations are meaningfully expensive than 10-year average, but they have the growth. So I think I would recommend investors to have a mix of large, mid, and small, and leave the judgment with the fund manager so that they can toggle around basis where he or she sees the value in the market overall. So I think a mixed portfolio of large, mid, and small based on the risk appetite of the investor is the best way to go about it. What I mean is, for instance, for a conservative investor, maybe a large cap heavy flexi cap fund. For a medium risk investor, maybe a slightly middle of the road option like a multi-cap fund. And for an aggressive risk investor who wants to play the earnings growth story of India with a long-term horizon, maybe a mid-cap fund. But clearly, as we go higher the risk spectrum, the tolerance for correction needs to be on the higher side. But we think with increasingly with the correction that we are seeing in the market, sooner than later, we would see mid and small caps becoming more investable from a valuation standpoint as well. They always had the growth anyway.
From Q3 numbers across the sectors, Pradeep?
So yes, across so that's from a diversified funds point of view. The second segment of investors are also the ones who look at thematic investments. From a thematic perspective, we would recommend that one should go contra rather than going where the themes in vogue. Because what tends to happen is when a theme is in vogue, you tend to get higher valuations, which is bad for future returns. So, for instance, when we talk about last year in the same context, we talked about IT as a dark horse of calendar year 24. That as a theme worked out quite well. This year, we are talking about consumption as a dark horse of calendar year 25. A thematic fund oriented around the same would do justice to investors' penchant for returns over the medium term.
The investment trend across funds of your AMC, Pradeep. We are looking at SIP numbers reaching a high every month. We are looking at SIP inflows right now. The numbers that came up show 26,000 and more than that in December. See, we are also talking about investors who have not experienced volatility, and we have discussed it a lot of times on the show as well, Pradeep. Do you think so? So our markets have really matured in a way, but do you think our investors are also matured? Do you think they'll be able to digest the volatility that we just spoke about right now?
We will see. But I think my sense is that the answer lies probably in the middle, that some have, some haven't. But I think clearly there are some elements of, exuberance which have been there in particularly if you look at micro caps or SMEs, where I think the experience might not turn out to be that great once the tide goes out and on a medium to long-term basis. But barring that, whether you look at large caps, whether you look at mid and small caps, the investor returns have not been completely out of sync with earnings growth. So I would think that particularly people who have come after COVID have had a good experience with markets. Some part of that will remain as long as they have remained mainstream. And I would certainly expect those set of investors to continue because in an inflationary world, equities is one asset class which acts as a strong inflation hedge. And hence, from that perspective, the returns that, for example, in CY24, that even a large cap investor made of about 12% is not bad. So I think they would kind of take solace from that. A brief correction is probably in order or has been in order, which is what we are seeing right now. And once we get to the second half of this year, better days will follow. So I think a good chunk, majority of the investors will probably kind of stick around, would be my guess. But we will see around the end of the year what happens.
To the markets, keep your investments going on, be disciplined in your investments, taper down your expectations, and yes, you need to have more of large cap in your portfolios. Thank you so much, Pradeep, for being on the show. It's a pleasure speaking to you. My questions, I do have a lot of questions for you left, but then, yeah, we'll keep that for the next time. Thank you so much for joining us today. Thanks.
Pleasure is mine. Thank you.
All right, time for a quick break, and post that I'll be joined by Hemant Sustigi, who will be answering your portfolio queries live on the show today.